Hello, guys. Let's start the AMA today. And I think today's topic is how do we maximize earnings with LVT and LNT? And I think it's actually a great time to kind of talk about our recent product update and in general how you as a users can use it and benefit from these DeFi strategies. I think I can start with LVT. First of all, we have made some pretty big strides in our story recently. After the Vario integration, we got some more integrations with a few staking validators, and with the new vesting tokens injected, I think it's close to 50 million just from story. And total TVL overall for LVT plus LNT, it's at right around 90 million. So we're pushing close to the 100 million mark. Definitely a great start because overall, it is a pretty big total addressable market in terms of logged tokens in crypto. There's 1.5 trillion total undiluted, like uninvested tokens in crypto as a whole. So there's just a lot that you can do with these tokens. For LVT with Story, Say, and also Filecoin, it's all pretty similar. It's liquid vesting in terms of in that you have the staking token or mining contracts that are logged for in the future for like 365 days, sometimes even more than 500 days. So the LVT means you are vesting token where you get the future principal plus interest. And lots of the holders, they tend to want to sell the future interest today to sort of get those benefits early. And you can also sell the principal portion. It's all the same. It's all the same as VTs. And in terms of on ZooFi, we have the minting portion where you get the VT, and you can also sell directly in our AMM. We have some liquidity in all these vaults where you can buy and sell VT directly against the native token T. So this is pretty straightforward for LVT holders for in terms of you mint the vesting token and you trade those. For users that are not holding the principal assets, you can also buy those VT at a discount. Depending on what vault you're looking at, like for example, with the either Checker notes or Repo, their notes, it's typically pretty good discount. It's sometimes even lower than 50% face value. You can buy those tokens, and it's guaranteed to be redeemable to the original token. So that in itself, it's a buy and hold strategy that has return, or you can kind of consider it as APY, depending on how many years you have with the vesting contract. So that's another strategy where you can go from not holding the token to buying the vesting token at a discount and then eventually redeem for profits. For VT holders, you can also use put option, which is another nice feature we created so that VT holders can get the earnings early on, as opposed to holding till maturity. So this happens whenever we the vault gets vesting token distribution from the source, and then when we get that, we would actually put those tokens into the put option for VT holders to redeem. That way, sometimes it's monthly, sometimes maybe it's sort of semi-annually. But VT holders, you can actually decide that you can redeem for those native tokens. Albeit we do take a fee. We charge a 20% fees on that. If you don't use the put option for sort of more immediate liquidity, you can of course still buy and sell at no fees, no discounts, like no fees charged on our part, and also just hold till maturity where you can get the full one-to-one redemption. So yeah, so the put option is really for people who are looking for incremental earnings. For example, with the repo notes, they are distributing, I think, every week or so. And then for people who are holding those vesting token VT repo, every week you can decide if you wanted to redeem some of that for actual repo. And then to some people, it might make sense because let's say your alternative is to actually sell that for repo at a discount. So if the discount it's lower, it's at face value in terms of face value than 20%, then you could actually be making a pretty good. It might actually make sense for you to use put option. But if the discount is bigger, then it's the other way around. So yeah, so that's definitely we have these flexibilities built in for users to like once you understand the logics of it, it's pretty straightforward. On top of that, we also have more like LNT stuff that you can do, like with the Aether checker node vault. You can be more creative because with Aether, the ATH token has quite a few more capital market plays available. Depending on where you are, you can trade ATH perpetual futures. Or even borrow and or lend ATH tokens on centralized exchanges. Depending on because of that, you can actually create more nonlinear strategies by holding the VATH, and then either hedge or amplify your returns with the futures. So we have published multiple articles, just sort of detailing how you can do that. You can actually go to our Medium page where I think you can either use the link tree in our X profile or trying to find it on our website. You go once you get to our Medium page, you can find those links to essentially run it to see how you can do it. I think I forgot to add everyone in the Discord about AMA. Let me do that right now. Yeah. All right, let's continue. So that's for the strategies. Basically, if we have a lot more products than last year, which is, I think, quite a variety of products on the liquid vesting token side. Of course, we started off with the liquid node tokens, where node licenses are a pretty, I would say, like standard vesting contract, and it's quite nice because it's decentralized. It's represented by a NFT. You're holding the NFT, meaning you're essentially a investor, like a SAFT holder, and you get investing contracts. Of course, you would need to run those nodes. That's a additional sort of requirement in compared with just pure financial investments. So we started off with nodes, and now we're doing more non-standard products and tokens. Like for example, with the Story protocol, we actually support liquid staking token unlock. Because despite that it's called liquid staking token, for lots of these LSTs, it's actually they have an option where you can lock it. So it goes from like 21 days to maybe even like 6 months. The mentality behind it is the longer that you lock your LSTs, the higher APY they provide you. And that creates an issue where some of these LST holders, they wanted to be able to have an option to sell those future earnings early, and that's where LVT comes in place. So for Story, Say, and even Filecoin on BNB chain, we support early, essentially early interest and plus principal unlock through VT, and then you can actually sell those in the AMM. Yeah, so that's pretty much for the products and then current products. Going forward, there's a couple of things that we're working on both LNT and LVT side. On LNT, we're trying to integrate more partners. So there, right now, we're at, as you know, like we're the biggest Ether ATH checker nodes market in terms of trading volume, in terms of liquidity and everything else. And ATH is the biggest node so far with the checker node. But going forward, we have the 0G coming, and I think that's going to be a bigger market in terms of holders, and it's also a new chain. So that one should be launching pretty soon. It's actually already deployed. We're just waiting for some foundation initial liquidity injections. And then also more DePIN projects, because there's quite a few new DePIN projects that were started last year and they're approaching launch. With DePIN project, it comes with nodes that has sometimes have token vesting rewards. And on our side, we're trying to reach out to some of these projects and then launch LNT for them. Depending on the requirements, it might be some might be more easy, like Repo, which doesn't require like a physical presence to run the node. Some might actually require collaboration with the partners. So we work mostly with node ops, but recently we're also talking with other providers that supports more variety of nodes. So that's on LNT side. We're trying to horizontally integrate more projects. On LVT side, I think it's an even bigger addressable market in terms of value, just because with staking alone, it's probably like, I don't know, maybe a couple 100 million of tokens or even more if you're considering Ethereum staking. So for that, we're actually talking with a few ETH liquid staking providers that have their LSTs locked as an option. So one of them is Metapool. As you know, we've already integrated with them on Story, which I think they have about 3 million in IP LSTs. But what they have more, it's actually Ethereum. I think they have 50 million in with validators staked as ETH staking, minting the LST. So there is just a much bigger addressable market. So for us, we're trying to see if there's a PMF for on the Ethereum side, similar to Story and Say, and then essentially tackle the Ethereum market going forward, which will be pretty exciting. I think it's in terms of TVL, is going to be a magnitude. Multiple magnitude bigger than the newer chains, yeah. So as long as I think there's a locking, there's also always going to be a need for liquidity. That's pretty much it on in terms of updates and on the strategies. And then also another note is we're working pretty hard towards launching our token recently. This is already a given if you've been following our socials. I think we're getting picked up by quite a few different medium outlets, different research outlets. So we're trying to on our socials, trying to spread some of those. We're getting picked up in terms of TVL growth, trading volume growth as well. I think we've recently went over 165 million in total volume traded, and then of course 90 million in total TVL, which is pretty great metrics. I think despite the market is sort of there's lots of FUD right now. On our side, the timeline is the same. Like whenever we feel that we have a strong enough product line, strong enough community, is a good time for us to prepare to token launch, because the goal has always been to decentralize and scale. Yeah, so we're working pretty hard on that. As far as the token goes, it's going to be called ZF token. ZF in short for Zoo Finance. And the biggest usage for it, it's going to be governance and profit sharing. The revenue mechanism is actually quite smart, designed for LVT and LNT. Through the put option, as you know, there's a 20%, in general, a 20% fee charge. And in our experience, we are observing about 50% of all the user volume uses the put option. So with the 90 million TVL, it's actually pretty significant. 50% of all users use it, and that's 45 million. And then 20% fees on 45 million, it's around 9 million. So that's gonna be annualized. So it's a pretty big revenue in terms of for the product. So the biggest usage for ZF, it's how do we use those and distribute those future earnings. And then we figure out a pretty neat way to run the governance, because you don't want it to just do it as a one-off. You want those earnings to be recurrent and sustainable. So those the current earnings has to essentially support essentially create a positive feedback loop. So the current more popular model is the V token model, where you stake the governance token for and then you'll be able to vote. So it creates an issue where every token holder, once they stake, they have to come to your project and vote regularly, and that is not very easy for everybody to do. And it creates a sort of an inefficiency where only some big holders like to vote, and then most people cannot really get their voice across. So we had a improved version for that called V Governance Node module, where we would set up these nodes for initially probably like for more informed individuals, like some power users, KOLs, to claim those nodes. And then what they can do is they would pitch for the token holders to delegate their the governance token to their nodes, so that they can actually do the essentially is like a delegation voting mechanism, where these V governance node holders do the voting on behalf of their sort of delegators. So this is a pretty interesting idea. If you're actually compare this to the U.S. Presidential election system, it's actually a little bit there's some lines to be drawn, but overall it's the same idea, where each state has their own electoral college, and depending on the population in that stage, they get 13 vote for a smaller state, maybe 50 vote for a bigger state, and maybe even more than 100 for places like California and Texas. So the more population or delegations you have, the bigger voting power you have, and that's sort of something we wanted to experiment with the ZF token governance, so that essentially what's even more I guess make more sense in this case is we could build in economic feedback loop, where they don't because end of the day, what the voting decides, it's going to be two things. One is profit distribution. It's going to be a percentage of how much profits you distribute to each vote, and also token distribution. Because majority of the tokens going to for ZF, it's also going to be gradually vested over years. So and we figure the best way to create this economic positive loop is the voting decides which vault gets more tokens based on the profits that vault generate. So each LVT and LNT vault is going to get has its own data, own metrics, like for example the story vault, maybe it's trading more or less than the 0G vault, and then what the governance node these sort of delegators, these like node holders or governance node holders, what they do is they would make their choices of which vault gets more allocations for future tokens, and based on how good their choices are, they get rewarded differently. So it's a pretty, I guess, a pretty straightforward mechanism. But overall, if it works, what it does is going to be we were going to see like different performance for this V governance node, and they're earning different APYs, and in return they're attracting more or less different amount of users to delegate their nodes for. Because if you're just holding the DF token, you will be able to actually see this V governance node and then decide which one you wanted to allocate to. So this is like a whole like an entire new module that we're building for the governance, and I actually think it makes quite a bit of sense. And then also haven't seen too many projects trying to sort of experiment in this direction. So it would be cool to kind of for us to explore this. So yeah, so just today feel like a good time to kind of briefly talk about that. So once we get even more closer to our TGE, we'll probably have this more of this finalized. Recently, of course, we've been working pretty hard towards the building this, and also getting lots of peer reviews and opinions from advisors and other projects. Yeah, so once that's launched, I think it will be a pretty exciting thing as well. It would just not just be a token launch, and sometimes a token launch, its paired with like a staking module. This would just be one step further than the current V token model. Cool. I think that's pretty much everything from me today. Once again, like every week, it's gonna be around Thursday this time, depending on where you are. And then most of the time we do this on Discord. And then if you aren't able to tune in, it's always going to be posted on our YouTube and also across our socials the day after. We're trying to do this weekly AMA so that you were accessible to you. And then you always can get the earliest feedback from us. So yeah, with that, I'd like to call it a day for now, and see you guys next week. Thanks.